A very warm greetings to all our viewers. Typically, at this point in time, we bring in our Nifty and Bank Nifty analysis based on NeoWave. Unfortunately, our expert Hussain is not available today. So मैंने सोचा कि why not do something different? And that different is something which I'm just sharing with you, something which is going on in my mind, and I am myself working on what to do in this market crash. I'm calling it a crash. I mean, you can always debate whether it is a fall or a crash. I will accept whatever definition you have. But the fact is that our headline index has fallen about 12%, 13%, the mid cap and small cap about 15%. And many portfolio, including the mutual funds, have fallen even more than that. So what I do typically, because I'm mostly a trader, derivatives trader, I always keep some cash with me. And right now also I have about 50% of my portfolio in cash or cash equivalent. But I see this fall. And obviously, this brings some sort of an opportunity in front of me to deploy that cash into direct stocks or into index funds. So I'm talking mostly in the video today from the perspective of someone who can bring in additional money in the stock market at this point in time. He has the capability to do so. So either they have additional cash, or they have source of income where they can do some savings and bring in cash, or they have the ability to rejig their portfolio and make some cash available for fresh investing right now. So I'm essentially addressing those people. And that's the topic. If I have cash to deploy, how it is, this is a different question because I don't know how many people have that cash, but whatever be the way, if I have cash to deploy, what should I be doing in this fall? So with that, let's begin. So one of the things that comes to our mind, there are three options, right? One is I should do specific stock picking because many stocks have fallen. And I keep on hearing from people, someone is saying, should we pick up Yes Bank? Should we pick up Asian Paints? Should we pick up, or should we remain in the momentum, the stronger stocks? So there are a lot of theory going around. One is there are people who want to buy beaten down stocks. There are people who want to stay in the stronger stocks based on whatever momentum strategy they follow. And there are some people who are discretionary and they are grappling with, what should I do? So that is one category. The second category is, should I start increasing my allocation in index? So there are different indexes, Nifty 50, Nifty Next 50, micro cap, mid cap, small cap, etc., or overall Nifty 500, whatever be the case, but is it passive investing? And one can increase the allocation, bring in some money. Obviously, no one is saying that go all in as a lump sum, but do some sort of an index investing in a systematic fashion and start now. And the third option is obviously do nothing and stay in the cash. I'm not talking about the trading strategies where you can do shorting and you can have a larger percentage of short built in your portfolio. I'm not talking about that. Today, I'm focusing only on investing. So these are the three options. Now, let's look at what can we do in this fall. So I picked up Microcap 250 index. I attended a particular space by one of the persons who has a newsletter and a lot of information related to microcap investing. And there were a lot of folks, there were 600 or 700 folks who were attending that Twitter or the X space. And there were a lot of questions. And what I realized was that even the founder was saying that his portfolio, which is largely, I'm assuming, is a micro cap or a small cap portfolio, has fallen about 18%. And there were people who were asking questions. Many of them had stocks which had fallen 30%, 40%. Maybe the portfolio had fallen from the peak. Obviously, they're still most likely sitting on handsome profit. So I thought, if I'm a small or a micro cap investor, what should I be doing now? Let's look at that. And I will also address people who are not only micro cap or a small cap investor. They look at all cap or they are large cap investors. With that view, I wanted to review. I wanted to review the. Just give me 1 second. I wanted to review the micro cap index. So I am taking you to the trading view chart of microcap. Now, if you look, this index is still strong. And if I compare this, let me just look at it. Just one second. So if I compare microcap 250 against CNX 500, and the bottom pane is the relative strength, we are still at greater than zero, which means it is still stronger than CNX 500. The fall started somewhere towards the end of September overall in the market. But if you look at the micro cap, it fell. It fell in October, but then again it made an all-time high in the week of 9th of December, and after that it has been falling. So this fall is close to 14%. So index has fallen 14%. And I was saying many investors, their portfolio, who are the specific stock pickers, that may have fallen from 80 to 30%, 40% in many cases, whereas the index has fallen about 14%. Now, what next? If I just look at the microcap 250, uh, if I just go by the moving averages, then you see the 50 moving averages. This week has closed below the weekly 50 moving average. Obviously, it is below. Last week, it closed below weekly 30 moving average, which many traders or even the long-term investors find give a lot of importance to. So we are definitely in a bearish territory. Now, if we use Fibonacci retracement, this is just one of the ways that I want to look at the price action also. And I'm focusing on the weekly time frame because we should be taking a little longer time frame in consideration for our investment. As I told you before, I'm not talking about trading here. Now, if I look at both Fibonacci as well as the price action, I see that there is a possibility that we may retrace 38.2%, which is an important Fibonacci number in this fall. And that brings the index. So right now, this index is at 22,750, right? Let me just check. Yeah, 22,725 is the microcap 250 index. If I look at the rise which happened from April of 2023, so about 20 months it increased from April of 2022, 2023, all the way till December of 2024. That, if I look at that rise and I look at 38.2% retracement, that brings me to 20,140 as the index level on microcap 250. If I look at the price action, you see there are some consolidation here, 4 or 5 weeks of consolidation. I can draw a line here that will take it to 20,601. So between 20,500 to 20,000 is one band where definitely you should expect some support, if not right now. And that is 8 to 12% more fall from here at an microcap 250 index level. So that's the first scenario. Again, something very good happens in the budget, we start going up, all those things can happen. And or for that matter, I don't think anyone has the crystal ball where they can accurately forecast the market. So this is just a scenario which I'm trying to paint with a view to decide what should we do if we have cash to deploy, right? So if we invest in this particular index, we may find a support here, or we may get 8 to 12% fall, which is a likely scenario. So that is the first scenario. The second number which comes, and again from the price action also, it is coming somewhere there. You see a support, if you look at the March low, which was formed on this index, March 2024, that was 17,303 was the March low. But the closing was not there. Closing was higher than that. Closing was very close to 18,400, 18,500. That is exactly where we have the 50% retracement. So the 50% retracement, as well as some sort of support based on the swing low, which was formed in March 2024, and some of the prior support levels, which were resistance, then it became support. I'm not getting into those technical details. That is putting the level at around 18,000 to 18,500 on microcap 250 index. Now that means about 20% fall from here. And the third one is the highly pessimistic scenario where we retrace all the way to 61.8%, which is another important, this is the very important Fibonacci retracement. That brings the index to 16,000 to 16,500 level, which means that there is another 26 to 30% fall, which is expected. If I just look at from the very top, what does it mean? That means 61% retracement means almost, uh, you know, yeah, it's about 40% fall, 38.52% fall from the top. And from where we are, it is about 26 to 30% fall. So this is the scenario when we are talking about the index. But at the same time, this index has done wonderfully well. This index is still above the CNX 500. So this is just the data. Now, the question is, should we get into stock picking if we have to get in right now and we are sitting on cash, or we should invest in this index in some sort of an SIP fashion? So for that, let me go back to my presentation. I have already discussed the levels, some of the levels on the micro cap. Now, if I go back there, uh, the question here is, how do I choose which stocks to invest? Because time and again, we have seen that the leaders of one particular bull run may not remain the leader in the next bull run. Actually, the history says that there is always a change. जो पहले अच्छा करते थे उनका दिन ढल जाता है और उसके बाद जो बुल रन शुरू होता है एक नए सेट ऑफ स्टॉक्स अच्छा करने लगते हैं. So if you look at the micro cap 250, the things which had run up, renewable energy, all sort of renewable energy play, defense, railways, all that had run up quite significantly. Now they have fallen 40%, 50%, in some cases even more. Will they be the stocks which will run up? And how do we decide? Do I get into value? Do I get into averaging? Do I get into momentum? Or some discretionary logic? So let me just rule out the discretionary logic because I don't know much. I mean, if you are a great stock picker in any market, you can pick up great stock. And if you have that ability, by all means, go ahead and deploy your cash in those stocks. So I'm not talking about those people because I don't have that ability to be an excellent discretionary stock picker. I'm more of a quant person, so I look at the data. So what is that data? I can either follow a momentum strategy or I can follow a value strategy. Now, let me discuss. Value is definitely my view. If I just summarize before I get into the next thing, I think that uh, if you have a way to do the value investing, this is a time where you can pick up some stocks based on the value. You have done the fundamental analysis. You're looking at their growth prospect, their capacity expansion, their order book, all that kind of stuff. And you look at where they are available in terms of their valuation, and you can do value investing. That's very, very doable, right? And I will definitely do part of that. Now, the thing is, should I be doing momentum strategy at this point in time? And let me tell you my view. My view is that momentum strategies don't perform that well in the bear market. They really perform very well in a bull market. But when it is bearish market, they in fact start underperforming. Now, obviously, there would be some momentum strategy and some genius momentum um, stock pickers who can beat the market even in a bear market scenario. But let me just look at a few examples. And basis of that, my hypothesis is that momentum underperforms during the bear market. It outperforms significantly during the bullish market. Right now, we are in a bear market, so we should not be doing momentum. We should be doing value. And when we see a turnaround, that is the time when we switch from value to momentum. And my favorite is that if I'm totally confused about all these specific stock investing, then I should just do some sort of an index investing. That I will come to that. So on what basis am I saying that the momentum has a higher likelihood of underperform? So I have picked up two things, right? One is I have prepared a list of momentum stocks. If I had to start the momentum in microcap 250 today, okay, and I have applied the simple logic. There are many ways you can pick up momentum. There are different fund managers or different investors who may be following different ways of picking up the momentum. Some do it basis of Sharpe ratio, some based on 1 year returns, some look at different time frame like 3 months, 6 months, 9 months, take out the average of the absolute return or the average of the Sharpe ratio. But there is always an element of price, whether it is relative strength or whether it is just give me 1 second. Just give me 1 second. Okay. Sorry for that. So what I have done in this particular case, I have looked at the last 1 year minus last 1 month price change and picked up the top 10 stock from the microcap 250 universe. This is just a screener. Okay. So my the top 10 stocks are PGEL, uh, Garware Fibers, Wokhart Pharma, Zensar Technology, Ganesh Housing. Zensar, I'll have to check. Maybe a mistake. Vavag, Viatech Vavag, Kirloskar Pneumatic, Newland, Time Techno, and Azad Engineering. And by no means I'm giving any recommendation. I'm saying, suppose someone starts today and applies the most applicable momentum strategy, which is you look at the price change in the last 12 months and you subtract the price change in last 1 month and pick up the top 10 stock. Now, there are other things you can do, as I mentioned. You can follow any of that. Now, if I look at these charts, and here I have compared them with the let me just change this to CNX to microcap 250 universe, right? As a comparison, and I'm looking at the last 6 months. So you definitely see that their relative strength is higher in all the cases, right? Whether it is PGL, whether it is Garware Tech, Wokhart, Ganesh Housing, Babag, etc. All of them, right? Some of them are now falling. Now you can create a shortlist like that and you check what happens to them after a month. If the market is falling and they are falling, what happens to them? Most likely, these guys may end up falling more than the index from now onwards. Okay. And this I'm picking up today. If I would have gone back a few months, I don't have that data. Then it would have painted a picture of what happened if I would have started it from, say, December fall. So for that, I am using two small cases for which I have subscription and I'm showing their data. And these are coincidentally from weekend investing. And of course, I'm a big fan. That is why I myself am a subscriber to it. So I have a lot of respect for weekend investing, a lot of respect for Mr. Alok Jain. But I'm just using that data to show that how these two momentum strategies have performed from this market fall, which started in, say, mid to end of September. I'm just using it as a data, no disrespect or nothing, no philosophical differences with anyone. And in fact, if anyone from Weekend Investing or Mr. Alok Jain is listening to it, my request for them would be that they can go back in history and they can look at various period and show a comparison of momentum strategy versus the index when there is a market fall, when there is a market correction, 10% or more, 20% or more. So they have a very nice way, and I'm a follower. So again, I'm some sort of a fan of weekend investing and Alok Jain. And this is by no means any critique for them. But I wanted to show that how their small case has performed in this bear market. So let me start with the India top 10 small case for which the data is there. This is publicly available data. This is nothing which is available only to subscriber. So if I look at the performance of India top 10, which picks up 10 momentum stocks from Nifty 50, and if I look at September 13th, which is when after that the market started falling, you can see I'm not looking at the previous top which they had made. If you look the India top 10 data, then from 13th of September, that index was at 175.48 and 175.48 and equity large cap was 149.66, right? This is the way they represent the data in the small case platform. Today, the momentum portfolio is down to 148.48. So it is down from 170.66 75.48 to 148.48, whereas Nifty 50 index is down from 149.66 on this scale to 134.03. So if I look at the fall, the small case has fallen 15.4% as opposed to 10.5% on Nifty. So it's almost 33% underperformance, or whatever, absolute term, if I look at 5%, 15.4% fall instead of 10.5% fall. So this one is the large cap uh, strategy. I also have subscription to another strategy, which is the MI20. And again, I'm not sharing any specific stocks. I'm just sharing something which is publicly available in terms of their performance, or should be publicly available. If I look at MI20 performance against the benchmark that they use, MI20 has fallen from 276.77 to 211.76. Okay, whereas the index has fallen from 179.14 to 155.72. Now, in terms of percentage, the small case, which is based on the momentum, and again, a lot of respect, so great momentum strategy, that great momentum strategy has fallen 23.5% as against the fall of 13% on the index, right? So if I look at this from a fund manager whom I respect a lot, I see that those strategies have significantly underperformed in this bear market. I also looked at, let me also show you the index, Nifty 200 Momentum 30 Index fall, right? And let me compare it with the Nifty 200, right? In terms of the relative strength. Nifty 200 index, you can clearly see that, once we have the fall in October, the relative strength of this particular index, and this is a factor index by NSE. So this is not by any fund manager. And once again, I'm not trying to say that you invest in a particular small case or not. By no means I'm trying to belittle. I'm just sharing what I'm seeing in the momentum strategies right now. So this momentum factor index from NSE, as you can see, it was doing much better when there was a bull run. Clearly, you can see on the chart, this is the 6-month relative strength. And right now, that relative strength is down to minus 0.1, minus 0.1. So this has performed much worse in this market fall. So my conclusion is that momentum strategies are great strategies when the market is in a bull market. They underperform when the market is in a bear market. So if you have some mechanism to switch from momentum to value, or you sit on cash, you can do it. Or there is an option which I like, okay? And I'll tell you what I like, okay? So let me go there. Yeah. So let me just share what I'm doing. I've shared all the things with you. Let me finally share what I am doing. And again, your money, I'm not an advisor. I'm just sharing what I'm doing. So as I mentioned, I do a lot of FNO. I'm net short in FNO position. And anyone who has an ability to short the market, this is a good time. You look at higher opportunities. You look at the FNO stocks which you want to short. So many times we keep on saying buy, 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 but there is always time when you focus on what to short rather than what to go long on. But that is a trading portfolio. It's not an investment portfolio. I don't think long-term shorting, at least I'm not comfortable making money by long-term shorting. I do trading, and in my trading portfolio, I am net short in FNO. I'm not disturbing my mutual fund portfolio. So as I mentioned, 50% of my money is in long-term and 50% remains in liquid fund, etc. That 50%, whatever is the allocation in the mutual fund, I'm not touching. I have some SIP also. I'm not touching that. I'm continuing with my SIP in mutual fund. I'm continuing holding my mutual funds. So I'm not touching that. Now, what I'm doing is, at this point in time, obviously, personally, my focus is on shorting the stocks using the FNO. So I'm not buying stocks. I'm not breaking my head on finding the value, etc. And I know that at least I think, not I know, I think that momentum will not work. So I am not doing any momentum strategy right now. All I'm doing is that I am doing additional top-up allocation in addition to my SIP in different indices. I'm not telling you the asset allocation because that's very, very individual centric. Some people are more comfortable with large cap versus small cap, etc. Some people are more comfortable with small cap. Obviously, if you ask me to stick my neck out, I would say that the chances that at an index level, large cap indices, particularly Nifty 50, will fall lower than all the other, which includes Nifty Next 50, which is still a large cap because they had significantly outperformed. The chances that Nifty 50 will fall less than them is much higher. So obviously, I am allocating more on Nifty 50, but I am also have started doing some top up in Nifty Next 50, mid cap 150, small cap 250, and micro cap 250. So I'm covering the entire universe, but I am investing in index. And when I see the green shoots, when I see that the market has taken some sort of support, it is going up, I will switch part of my fund from the index investing to back to momentum investing. That is the time when I will switch to specific stock picking. I'm not averse. I showed you I have subscription that is not without anything. I have invested, I have benefited, and I do it, and I have my own momentum strategy as well. I mean, many times, I take a lot of subscription because I am also interested in this as a profession. So I see, what my potential competition is doing as well. So that's another reason. But I have my own momentum strategy as well. I will switch from index to partly from index to momentum. But for now, I am doing index SIP, and my plan is to do 10 installment of 5% each, and then 5 installment of 10%. So that will cover 100%. And how much fall I'm putting that installment. So on Nifty, it is I'm putting on every 1% fall. On Nifty small cap, I'm putting on every 2% fall. Now, I'm not getting into detail on every indices, but Nifty, I am putting this installment on every 1% fall from here. But it would be minimum 2% fall on all the other indices from here. And I want to put 10 installment of 5% each, which means I will deploy my 50% of the money in the next 10% fall. And then I will deploy another 50% in the next 5% fall. So I'm having the money to deploy from now to another 15% fall in Nifty. After that, it's index. I will have to wait it out. Of course, as I mentioned, I am personally a trader, so I always have the short strategy and I can manage things through options or the futures or synthetic futures, etc. Everyone may not be in that. So whatever I'm saying, please take it not as a sacrosanct thing which you start implementing. Is just a thought. I'm just sharing. Today I would have made a new wave video. Instead of making a new wave video, I'm making this video. So don't, nothing else. So that's all I wanted to share today. So just to summarize, what I'm saying is that at this point in time, when the market is in a bearish mode, my view is that doing some sort of an SIP based index investing is preferable over individual stock picking. At the same time, we have to do in multiple installments because there is a room for a much larger fall. But when this fall is sustained and is stopped and the market starts going, these indices will also go up. And also that would be a time for me to shift some money from index to momentum strategies. So with that, I hope this video was useful for you, or some thoughts which you would have got from this video. Nothing else. I don't think I'm giving you any specific investment advice or I'm some big guru, etc. I'm not. You have a wonderful trading week ahead, and thank you, and see you later. Right? Thank you so much. Yep. Just 1 second.